Hey guys, how's it going? Welcome back to Trading Options Network. Hey, today I'm going to do things a little bit different. I have not scripted anything here. I have a couple notes, but if I fumble along my words or among my words or whatever, you're just going to have to deal with it today. The last video I did was all about fundamental analysis. Today, we're going to talk about technical analysis. This is what I typically use for all of my trading. Again, when it comes to the fundamental analysis, that's something that's typically used for long-term trading. I am a short-term trader, or also known as a swing trader. I don't keep many positions more than a couple of weeks. So therefore, I rely more heavily on technical analysis versus fundamental analysis. That being said, when I say technical analysis, what exactly is technical analysis? Well, the definition of technical analysis is actually quite simple. It's the use of historical market data to predict future market behavior. I'm going to say that again. Technical analysis is the use of historical market data to predict future market behavior. In other words, what happened in the past is more likely to happen again in the future. It's as simple as that. When it comes to technical analysis, there are four basics. The first one is simply trend analysis. That's literally just what is the stock or what is the sector or what is the market doing. It's the study of direction and strength of a market trend. So, for example, right now I could very easily say that the S&P is bullish. Let's just look at SPY. There we go. Previously, I could very easily say that the SPY was definitely more bearish than bullish. It was on a downtrend, as you can see here. It was clearly bearish. Here, we can clearly see that it was bullish. And lately, as of late, I should say, we could clearly see that it is becoming bullish yet again. Of course, we can also have neutral stocks, neutral ETFs, things that are moving more sideways. In fact, if I zoom in here, I could easily say that right now, the S&P is actually a little bit more neutral since it is actually moving more sideways than anything else. This is actually called a flag. Okay, we'll talk more about flags here in a little bit. Actually, just here in a moment. But again, the first basic when it comes to technical analysis is trend analysis. Is the stock, is the market, is the sector, whatever, is it bullish, is it bearish, is it neutral? Next thing we're going to talk about is chart patterns. I just actually talked about one right here. It's been going up, and now it's been going sideways. You may hear this called a high base. You may hear it called a flag. I call it either one. To me, it's the same exact thing if I'm a little bit more precise on my drawings here. Move this down. As you can see, it's going up, and then it's really not dropping down this support level, but yet it's not really going up this resistance level either, going higher than that resistance level. I would consider that a flag. It looks like it wanted to break out a little bit today, but it's come back down since. So curious to see what happens the rest of the day and into tomorrow. There's other things such as pennants. I think one I found earlier today was AIG. It's kind of a minor pennant, but yet again, pennants aren't typically very big. Let's see if I can just get there. We go. So as you can see, it's been going on an uptrend. Boom, 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 boom. There we go. And here, it's been coming down just a little bit each day. However, it hasn't really broken that support level. It did one day, but it came all the way back. So I don't really count these shadows when it comes to technical analysis myself. Some people may. But to me, that tells me that even though it did break the support, there was enough buying power or buying pressure from the bulls to keep it above that support level. So therefore, I would consider this a small pennant. So again, we're getting kind of close to the end. We might have maybe Monday to, put one more small candle in there, but I would expect to see this pennant broken one way or the other sometime next week. That being said, typically when I see something like this, when I see a pennant or a flag or anything like that, like I saw in the S&P, excuse me, I would assume more times than not it's eventually going to break it. So I would assume that we are going to see something coming up this way, okay, in the near future. Let's see. I don't really like how that drew. Can I draw a free hand? Here we go. Boom, boom, boom. Doesn't really do much for me either, but nonetheless, I would not be surprised to see this move higher sometime next week. And same if I go back to the S&P. Again, I would not be surprised if I see this break higher sometime next week. If I go ahead and draw in that flag one more time. Boom, and boom, boom. It already looks like it's trying to, so yeah, I definitely would not be surprised if I saw it go higher sometime next week. And possibly, if I go back far enough, we might even see new record highs on the S&P. Let's just trim this down. So if I extend this line all the way across, boom, boom. I would not be surprised if we start challenging the new, or not the new, but the all-time highs for the S&P sometime in the near future, maybe the next month or two, or sometime going into spring. I would not be surprised at all. Other things you may see are stuff such as triangles. Okay, and by the way, if you guys are curious, I use FinViz here for a lot of my screening. You can see at the top here, it says descriptive, fundamental, and technical. Descriptive is not really much of an analysis. It's just, what's the word? You're just filtering the stocks. So for example, I typically look for stocks or ETFs that have average volume over 1 million. I like to see them typically over $15. Okay, sometimes I'll jump down to the over $10, but I typically like to see them over $15. I'm an options trader, so I want them to be optionable, and I typically want to stick with U.S. Stocks, so things in the New York Stock Exchange, NASDAQ, things like that. So this is typically what I'm looking for. Fundamental, we talked about the other day. We had the P to E ratios, the PEG ratios, the earnings per share, things like that. Again, I don't really look too much on this page because, as I mentioned multiple times, I am a swing trader, not a long-term trader. If I'm a long-term trader, I would be looking at this page significantly more than I'd be looking at the technical analysis page. That being said, coming back over to the technical analysis page, there are things called triangles. Let's see if we can find a good triangle. We can do the ascending or descending. It doesn't matter. They're all the same. Let's see here. This one's not bad. Let's see if we can find a better example, though. This is a pretty solid example, if I do say so myself. Obviously, it had one really, really bad day. It looks like it was earnings. But as it dropped down, look what it's done since. It has hit a couple of times a resistance level. However, the overall each day is, it's creating higher lows. So this would be called a triangle. It's very, very similar to a pennant, as I talked about earlier. In fact, I kind of want to see if I can find a better example here. Let's go back to the screener. Technical pattern. Let's see. Triangle. Let's see if we can find a good example. I want something that's a little more long-term. Typically, triangles are going to be more longer-term, whereas the pennants are shorter-term. So I want to find something that's a little bit more long-term. Let's see, what if I look at this one? Here we go. Yeah, this one's not bad. Actually, it looks like it just recently broke through a triangle. So if I draw this line right here, it looks like I had some decent resistance right there. In the meantime, it was creating higher lows. This is a good looking triangle. However, in the past week, it does look like it has actually broken out of that triangle. And then if I actually zoom in a little bit more, I kind of like this actually. I might even make a position on this in the near future. But as we can see, it's been going up, 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 up. And then it hit this resistance level once, came back down and hit a new low or created a new low. Then it tried to hit the resistance level, break the resistance level again. It failed. It came down. It created a low, albeit a higher low than the previous one. Then it came up a little bit, hit it, created another higher low. Then it went up and tried to break the resistance again. And yet it still did not want to do it. Came down, but look at this time. It didn't actually come all the way down to the support line that I had just created. And then shortly thereafter, it had actually broken through this resistance line. Now, what is it doing? It looks like it's actually creating a new flag. Okay, it's a small flag. I would not be surprised if this stock also in the near future starts going up more. I don't know. Let's see if we can just zoom back a little bit. Are we already in all-time highs? If we are in all-time highs, no, we are not. But if we are in all-time highs and it's threatening to break like that, that's actually a really, really strong bullish signal. It looks like there's a lot of resistance from, let's see, pre-2022 into 2021, where it has hit these levels. I wonder if we go back any further. It looks like those were the all-time highs right there. So if it ends up breaking these levels right here, I just looked. I didn't even see the ticker symbol till right now. Anyways, AZZ, assuming it's an optionable stock, this could be a very, very bullish stock come sometime in 2024. So I might keep an eye on this one for sure. Let's see, going back to the screen, or if I go back to the technical fact here, let me go ahead. I'm going to do the over million and over $15 again. Country US. Let's look at some other things here, such as head and shoulders patterns. Actually found one while I was looking it up. Oh, shoot, I can't remember which one it was, though. Let's see. Any head and shoulders patterns I like here? Oh, this is it, actually. This is it. A head and shoulders pattern, whether it's a head and shoulders or an inverse head and shoulders pattern, meaning a head and shoulders pattern is something where it's been going up, 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 and then the head and shoulders appears, and then it starts breaking down. An inverse head and shoulders is the opposite. It goes down, 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 and then we have an inverted head and shoulders pattern, and then it starts coming back up. I'm going to talk about this one right now. This nice little head and shoulders here. All right. So what exactly is a head and shoulders? Well, I'm going to draw this line going across. Okay. Excuse me. This line right here represents a resistance line. Okay, stocks have come up and hit it. I can even move down just a little bit. Maybe like right about there or so. There we go. Okay, that's a resistance line. It's been coming to the stock itself has been in a bull trend, as you can clearly see here. Had a little bit of a pullback, but then it started going up and created yet another higher high. However, this time it comes down. And if I go back a little bit, I'm willing to bet, it's very, very close. I was going to say I'm willing to bet that there was previous support there. It's not too far off. Okay. Not too far off at all. So I'm not surprised to be seeing this head and shoulders right now. Let's get back into here. Okay. Head and shoulders is when it comes up, it hits a resistance level, comes back down, and then it tries to break it. And it does actually break it for a short period of time. But then it comes right back down below that resistance level, and then it tries to break through the resistance level again, and it fails. Okay, anytime you see something like this, This is considered a head and shoulders. So I'm not surprised that when it failed to hit or to break this resistance line on this day, it looks like it would have been late October, October 25th-ish. Okay, and the same on October 24th, 25th, and the 26th. Okay, these 3 days right here, I'm not surprised that shortly thereafter it had a big red day considering it was earnings. I'm not surprised at all that it broke down because it failed to break that resistance line. And then what happens on a head and shoulders? If it comes up and you see this head and shoulders form, it typically means it's going to start reversing. Well, sure enough, after this big drop down, it tried coming up, but it's creating a lower high than previously. Okay, if I just go ahead and draw this line in, boom, you can see it's now creating a lower highs as it goes. So I would not be surprised to see this stock do something like this where it comes up. Oops. Whatever. It comes up. Get that brush back. There we go. Comes up and then starts going down. Maybe comes up more and then starts going down. I would not be surprised to see something like that in the future for OHI. Again, nothing is perfect. This could very easily do the opposite where it just decides, oh, you know what, I'm going to go up and screw this line, I'm going to go up more, and screw this line, I'm going to go up more. And who knows? We don't know. All we can do is look at the history of this stock and the market and how things react to certain things and predict what might happen based on previous results, essentially. So that being said, what about candlesticks? We talked a lot about candlesticks just recently. Okay. Go back over to technical. There's all these different types of candlesticks. Engulfing candlesticks, which actually surprisingly is not on here. Although these Marubozu, I always mess up that word. Candlesticks can oftentimes look a lot like an engulfing candlestick. But a lot of these look like dojis. Okay, we have the doji, the dragonfly doji, the gravestone doji, the spinning tops, the hammers, the inverted hammer, long upper and lower shadows, all these different types of candlesticks, which if you watched my candlestick analysis video, you understand what a lot of these are. I'm going to see if I can find a good engulfing candlestick. And wow, there's a lot of potentials, 157. So look at as I go through here, look at the very last one. This is almost an engulfing candlestick. It's come down. Today it had opened lower. If this stock in the next hour or 2 hours, I still have 2 hours before the market closes. If this price today for ABTS can grow above this stock's open from yesterday, which was $1.09. If this stock can close higher than $1.09, then this would definitely be an engulfing candlestick. Right now, it is at, what is it? It's at $1.08, so it's only a penny away. Would I trade this? Probably not right now because it's such a small stock price or a low stock price. But nonetheless, this is an example of a engulfing if it can just, finish 2 cents higher. What about, let's see if we can find another one. Look at these candlesticks. These candlesticks are massive. Here's an engulfing one. This is probably one that I wouldn't do much trading on because it does not look based on this chart that this is a very liquid stock. AFSM, First Trust Active Factor Small Cap ETF. Most days it doesn't do much. But compared to yesterday, this is definitely an engulfing candlestick. Let's see here if we can find some good ones. Almost. Looks like this one just had its IPO. Boom, boom. Here's quite an engulfing candlestick, if I do say so myself. We had our candlestick yesterday. It gaps down and then shoots up higher and is significantly higher than where it opened yesterday. So that is a good example of an engulfing candlestick. And what does an engulfing candlestick mean? It means we should not be surprised to see this continue going higher coming in the near future. Let me just get rid of that. Boom, boom. And again, if we see something like this over the next few days, I would not be surprised. And I would not be surprised if, based on just this one candlestick, if we hit up towards, 1275-ish, and then break past that. It looks like it's recent highs. Yeah, although, again, this is why I like stocks that are above $15. Gosh, this one has just been beaten down for quite some time. It's up towards $90 a share. So, anyways, again, there's a reason why I like stocks over $15. But nonetheless, that is I just went through quite a few actually, but those are some chart patterns that you might look for. Those are chart patterns that I look for. Another thing, let's see if I go back to the screener. Actually, I'm just going to go back to the S&P. There we go. Notice these lines here. What are these lines? SMA 20, SMA 50. These stand for simple moving average. And because I'm looking at the day, this is 20 days and this is 50 days. If I was looking at the hour, this would be 20 hours and 50 hours. So depending on what chart you are on, what time frame you are on, this 20 and the 50 simply mean the number of candlesticks, basically. Okay. So if each candlestick represents one day, then this is the previous 20 candlesticks. This is the previous 50 candlesticks. Okay, it's a simple moving average. We also have things such as the exponential moving average. People will use the crossovers, for example, which I'll talk about here in a little bit. But essentially, personally, I actually like the 20 and the 50 simple moving averages. Come over here to the settings. I could actually change these to the exponential moving averages. 5 is a very common one. It's funny that it hit that. 8 is another common one. And I could even do another one of 13. A lot of people use the 5, 8, 13 exponential moving averages. I'm going to change the colors here. I'll make one green and I'll make one blue. Boom, save it. All right. Here I have our exponential moving averages. Okay, again, one is 5 periods, 8 periods, and 13 periods. Why do I use the word period? Because again, in this case, it's 5, 8, and 13 days. But if I change it to 5 minutes, it's still 5 periods or 5 candlesticks, 8 periods, and 13 periods. All right, so a lot of people will use the 5, 8, 13 exponential moving averages. This is actually a decent strategy, looking for bullish and bearish potentials or potential to trade on. So if I look at this 5 EMA here, if I go down right here at the very end of November, traders that use this strategy, the 5, 8, 13 crossover, are going to look at the 5 and they want to see when it's going to cross over the 8, 13 in a relatively close period of time. Well, sure enough, this happened just a couple of days. It crossed the 8 and then it crossed the 13 and went higher than both of them. For most people, that's a huge bull signal if they use this 5, 8, 13 method. And sure enough, if they traded that, they are sitting very pretty right now, because from here when it happened, it's gone up almost 10%. Okay, so that's massive. If I go back to the simple moving averages, I'll just get rid of this one. I'll go to the simple. And simple, again, I like the 20 and the 50. 20, 50. One's orange. I'll make the other one blue. Look terrible together. All right. So as you can see here, the 20 didn't cross the 50 until much, much later after this rally. So if you were waiting for this to cross, you wouldn't have bought into a position until here. Now, don't get me wrong. You still would have profited some, but not as much. Now, I personally, while I like the 20 and the 50 SMAs myself, I don't actually use them very often as indicators to get into a position. I use them more for, I guess you could say, supplemental reasons, I guess you could say, as why to get into, or just proof from other indicators that I'm looking at that, yes, that could be a good thing to do. Some other things that I will look at, or a lot of traders will look at, are your MACD, CCI. That's CCI, by the way. Let's find MACD. There's MACD. I actually like the Bollinger Bands. People will like the Bollinger Bands. Now, the Bollinger Bands, oops, cancel that, save, there we go. What are Bollinger Bands? A lot of people will use Bollinger Bands. And if you look at this, going back, it's very, very rare for a stock to go outside of its Bollinger Bands. Now, again, this is the S&P 500 ETF, that's the SPY. But if we look, it's very rare that it goes above the top Bollinger Band and below the bottom Bollinger Band. Okay? What is the top and the bottom Bollinger Band? The top Bollinger Band and the bottom Bollinger Band are 2 standard deviations away from the moving average. Okay? Now, coincidentally, this is another reason why I like the 20 and the 50 moving average, is the moving average of the Bollinger Band is the 20 simple moving average. Okay, so if we look at this, the top purplish line, I guess, is 2 standard deviations above the simple moving average, and the blue line is 2 standard deviations below the simple moving average. What do I mean when I say that? When it comes to stocks, a stock price will be within 2 standard deviations of its moving average 95% of the time. 95%. Okay? I know, again, this is the S&P, but if I were to, I'm just going to pick one random one. I'm going to pick Tesla. I'm willing to bet that Tesla is going to be outside of it a little bit more often because of how volatile it is, and it's really not, surprisingly. It is. I see it here. It's been kind of peaking out over here, peaked out there. So, I mean, it's probably more than 95%, but not much. But nonetheless, why do people like Bollinger Bands? Because oftentimes when it sneaks out from the Bollinger Band to the top or the bottom, it is signifying that, hey, you know what, it's not going to drop down much more, or not. It's not going to go up much more. Of course, this one right here clearly defied that. Okay. Oftentimes people will actually use, hey, this is the first time it jumped outside of the Bollinger Band. I'm going to look for it to run up. Again, everyone has different trading strategies, but that same strategy would have been really bad right here, because if they created a bearish position, it would have looked at it for a couple of days, and then they would have been SOL after that. Same thing here. While it did break down and came up, actually this wouldn't have been terrible, but it didn't have quite the run that this had when it first peaked out of the top over here on the side. Again, there's so many things when it comes to technical analysis, and this is probably a video they're going to have to watch more than one time to really understand exactly what I'm talking about, because one, I've been doing this for a long time. I know I'm probably saying things quickly and not always in layman's terms. I'm doing my best, but nonetheless, if you have questions, obviously feel free to reach out to me. Post a comment on the video. You can email me at brett@tradingoptionsnetwork.com. There's so many ways to get a hold of me or ask questions. You can do that. But nonetheless, when it comes to technical analysis, there are so many different things to look at. So many. My personal favorite, my setup, is the 20, the 50 SMAs, the Bollinger Bands, the CCI, the MACD, and the ATR. Let me find ATR real quick. Average true range. There we go. Save it. Why do I like ATR? Well, the ATR, and I do typically use the 14. Sometimes I'll use the 20 ATR average. But basically what this means is it is the average of the stock price movement each day for the previous 14 days. So in this case, Tesla has a significantly high ATR. It means that this stock price will actually move. In the last 14 days, it averaged a $9.38 move. Okay. Again, if I were to go to, say, AbbVie, was it ABBV? I believe, yes. Okay. Oh, I gotta add it back on. It looks like RSI is on here. See, I like the MACD, the CCI, and where ATR. There we go. Boom. Okay. Even though this has moved significantly in the last 2 weeks or so, its ATR is only $2.39. And this one bar right here looks like it moved from a high of, or a low of 138 and a high of almost 143. So this moved almost $5 that one day. So if we take that one bar out, that probably drops it to below $2. For a stock that's almost $150 a share, to be below $2 in price movement a day is, relatively not volatile. If I were to go back to SPY, okay, the S&P ETF, this one has an ATR of $3.95, so slightly under 1%. So as of the last 14 trading days, this stock or this ETF has essentially fluctuated each day by roughly 1% from its high and its low, a little bit under 1%. The CCI, what do I like about the CCI? The CCI actually does a couple of things. One, it signals, I should say, when something is overbought or oversold. But at the same time, while it could be used as something that's overbought, technically anything over 100 is overbought, anything below negative 100 is oversold. The CCI will also somewhat act as a momentum indicator as well, similar to the MACD. So when it crosses 100 or negative 100, this can actually be a signal that the stock is going to go down a little bit. So, or if it goes below negative 100, it'll go down a little bit. So if I go here, sure enough, when it crossed here, it did drop a little bit. Then it came back up. Okay, over here, sure enough, it did drop a little bit, and then ultimately came back up. And then from here, sure enough, it did drop a little bit, and then it came back up. On the flip side, let's see if I go back over here, it crosses over 100 and started to rally. Right here, it did go over 100, did it rally? Not really. Again, nothing's 100%. Here, same thing. Did it go up for a couple of days? Then it came back down. Here, this was a big one. It crossed over the 100 on the CCI, and then it started a major rally. Now, one thing about CCI, as well as MACD actually, is there's something called bearish and bullish divergence. Okay. This one is not huge, but if I were to draw a line from here to there, again, it's a very, very slight decrease in the peaks while it's still going up. So this, even though it's so slight, this would be considered bearish divergence. Same thing right here. If I were to draw one right here, from there to there, this would be bullish divergence because as the stock price itself went lower, the lows of the CCI actually was higher. So that would be a bullish divergence. This would signal that the drop is nearing an end and it should go back up, and sure enough, that's exactly what happened. Same thing over here. This is signaling that the rally might be coming to an end, and then we should have a drop, and sure enough, that's exactly what happened. It did pull back a little bit. So again, CCI, I really enjoy the CCI. MACD for me, it's just a momentum thing. If I were to look at this right here, it signaled here that it's losing a lot of momentum. However, even though it's losing momentum here, the CCI is saying kind of otherwise. It's still a relatively high number. The pattern here, it's creating, as we mentioned earlier, a flag pattern after a very, very nice rally. So to me, I did not really think too much into this because, again, when I'm doing my technical analysis, I want all the things to match, or as many things as possible to match, not just one thing. I'm not going to say, oh, the MACD is crossing, I have to enter into a bearish position. I'm not going to do that. But I like the fact that it's flagging right here, or high basing, whatever you want to call it. It looks like it's about to cross over 100 again. I like that. The ATR has been dropping, okay, which means it's consolidating. Essentially what it's allowing is it's allowing the 20 and the 50 SMAs to catch up to the price. It was so far away from the moving average, and now it's going sideways, but the moving averages are now catching up. So again, there's a lot of things that are signaling the S&P is going to remain bullish. And as I had mentioned earlier in this training, I would not be surprised to see this just start floating up higher and eventually maybe even breaking the all-time highs around here and creating new all-time highs. Maybe, well, not maybe. I would not be surprised even a little bit if we did break 500 sometime in 2024 based on the analysis that I'm seeing. So anyways, I know this video is a lot longer than the fundamental analysis video. It's because I use this every single day, whereas fundamental analysis I don't use very often. Come back over to the screener. But again, if you guys have never used FinViz, I highly recommend it. It's a great tool to screen for different stocks and things of that nature, different ETFs, potential trades, all that stuff. The descriptive will allow you to look for, filter for specific stocks or ETFs, certain industries, certain sectors, certain countries, prices, things of that nature. The fundamental analysis, if you want to, you could do the P to E ratio. You can look at the PEG ratio, all kinds of things you can do with the fundamental analysis if you're looking for more long-term trades. Technical analysis, this is where I live. There's 9,514 total stocks. I will literally plug things in until I'm down to about my top 10 or so. That being said, I hope this helped. Again, if you guys do have any questions, you can email me at Brett, B-R-E-T-T, at tradingoptionsnetwork.com. You can comment on the video. If you have questions, do not hesitate to reach out. That's what I'm here for. That's what I want to do. That's what I enjoy doing. I want to help people. So again, I really appreciate you guys if you're still watching this video. Appreciate you staying through it. Hope you learned something. Go ahead and subscribe if you guys have not subscribed yet to my channel. You can also find me on Facebook, Facebook and Twitter. Facebook, TikTok, and Instagram for daily updates and things of that nature. But that being said, hope you guys have a great rest of your day, and God bless you guys. Bye-bye.